All right, so today I wanted to make a video about a new ETF I've never talked about before. Uh, it's Blocks, BLOX. This is the Nicholas Crypto Income ETF. I had never heard of it up until very recently. I've never heard of this fund family. So I want to talk about that. Full disclosure, I do have a small position in it. First things first, if you get value out of the video, please like and subscribe. Check out the links below. So let's get right into it here. So Blocks is an actively managed exchange traded fund that provides exposure to blockchain technology to enhance income and provide portfolio diversification. The fund blends digital asset related investments and traditional income generating securities to capture growth and potential in emerging technologies while maintaining a focus on risk-adjusted returns. So it does not invest directly in Bitcoin or any other cryptocurrencies. So let's get into a little bit more here. So they claim fund objective Bitcoin plus ETH plus crypto industry companies plus weekly income. So one of the benefits of this ETF is they do pay weekly dividends on Monday, which of all of the other ones that I own, this is the only one that pays monthly. So if we look at the data here, it's got about $68 million in assets under management. The expense ratio is just over 1%, 103 basis points. So pretty much the same as the other ones that are comparable. And again, there's the distributions here. So let's get into the holdings first, and then I'll talk a little bit more about it. So if we go down to its assets under management here, this is something I wanted to talk about because there's some things that I don't necessarily like about it. But so first things first, deposits with broker for short positions, so that's 34%. Next, we have the VanEck Bitcoin ETF. We have the Fidelity Bitcoin Fund. We have the iShares Ethereum ETF. We have Galaxy Digital, Robinhood, Riot, Hut 8, Coinbase, Taiwan Semiconductor, Marathon, Nvidia, Iron, Block, Strategy, Cipher Mining. So the first thing you notice here is, I mean, I'm happy that the Bitcoin funds are the biggest, but again, I'm not a fan of altcoins, right? I mean, the altcoin debate is very easy because they all either have extreme or at the very least some centralization, which defeats the whole purpose of cryptocurrency in the first place. A lot of them have, I mean, a lot of them have like literal CEOs and stuff like that. It's just complete insanity to even suggest owning them. A lot of them had massive insider or ICOs, or the insiders profited massively from it, which again also completely defeats the purpose. So I'm not a fan of altcoins for obvious reasons, and I think it's a really easy debate there. And I don't know why, like, why is strategy such a small position? Like, by far the biggest name in the game is like they're bigger than Coinbase as far as their market cap goes. They're bigger than Robinhood. Like, why are they a smaller position? It really makes no sense to me there. Now, maybe there is a good reason for that, possibly, but to me, it just doesn't make any sense. Now, again, they do use, it looks like the way that they generate income is by selling puts, right? In fact, I don't see, there's very few calls, right? In fact, there's almost all puts here. So what they do is they're simply selling puts to generate income. Now, again, the difference between that and most funds of this nature, they're covered call or a synthetic covered call fund. So they are making money typically, at least the traditional ones. The synthetic ones try to replicate price returns using options, so they can use puts and calls, they can use spreads, they can use pretty much anything. But most of these funds they're generating the income to pay the dividend through covered calls. Puts are kind of like the opposite of that, right? Like, if I sell a call, I'm saying I'll sell the stock or the index, but at a higher price. A put is saying I'll buy the underlying index or stock, but at a lower price. So if you're buying the puts, again, the opposite, but that's kind of the difference. They're kind of like the mirror image of each other when it comes to puts and calls. But the one concern I wanted to point out here is I don't know why strategy is not a larger position. I think Bitcoin should be a larger position. Like, and I mean, why is Robinhood? I mean, they're kind of adjacent to crypto. I mean, but I mean, Taiwan Semiconductor, Nvidia, like they're kind of reaching a little bit, I think, when it comes to, crypto and Bitcoin. But again, it is what it is. So let's talk about what people are probably the most worried about or the most wanting to know about is number one, the dividend, and number two, how is the stock performed or the ETF? The dividend, the 6.86%, that is not correct. That is only because they've only been around since June. If you look at the dividend and you base it solely based on this September 15th payout, and you times that by 52, divide it by the share price, the closing share price, you get about 33%. So that's good. Like that's really good. That's not as much as some other ones, but I mean 33%, that's still an insanely high dividend. So I like that. But the most important thing I want to point out here is the share price returns have been very good, right? I mean, if we look at the share price returns since inception, you're looking at about 37%. Even just the share price returns is 27, right? So even if you're not even including the dividend, it's still easily beat the S&P. So this is why I'm interested in this fund because it's done very well. And I mean, one caveat that people could point out to having Nvidia and like Taiwan Semi and some of these other names in there is that it's a little bit of diversification, right? Because if the price of Bitcoin goes down 10% tomorrow, it's not going to affect Nvidia's share price. If it is, it's minuscule. Same goes for Taiwan Semi. But when you look at some of these other companies, like Bitcoin could trade sideways. I mean, Bitcoin traded sideways for a good, basically the last what, few months, couple months or so. But I mean, Nvidia is up. Taiwan Semi, I know, is at a basically very close to a 52-week high. So that it could be good in that it provides some diversification. So let's compare it to some other funds here that I like that I own, just for sake of comparison here. The first one is going to be HBTE. Now this one is only traded in Canada, so Americans, maybe you can own it over the counter, but I don't even know how you would go about that. So this fund came out in April 2025. So let's go back to June 17th just for a direct comparison. The reason I'm bringing this one up is that it's the only one that I know of that's actually outperformed it. This one is up 66%, 56% with dividends. So this one has done absolutely insanely well. I really like this one. The dividend is not as high on this one, but the share prices have done quite a bit better. So that's why I really do like this one. If we look at YBTC, this one has not done as well, but it still has done decent. Let's look at it. So this one is up 14%. Share price is up 2%. S&P just barely beating the S&P. So this one is still done good. Look, it's still done good, but it is underperformed both of the other ones. And I compare it to this one because this one has a very good track record. It's been around for I think almost 2 years now. It has been around since January 2024. Yeah, so we're coming up on 2 years in about 3-4 months now. And I mean, even when you include the dividend, it's almost double. Actually, it has more than double the S&P. So that's why I like this one. It's one that's been around for longer, and I think funds that have been around for longer definitely get the benefit, a little bit of a benefit of the doubt for me, because a longer track record is better than a shorter track record. So the last one I'll compare it to here is BTCI. This one is the Neos one. This one, this one's done very well since inception, right? It's absolutely destroyed the S&P. It's been around since October 2024, so almost a year now. But if we compare it from June 17th, June 16th, close enough, it's actually underperforming. I mean, the share price is slightly positive, but even when you include dividends, it's 8% as opposed to 10% for the S&P. And this is one that I have viewed and a lot of people view as one of the, again, no ETF or stock is quote unquote safe, but it is safer than your MSTYs and XBTYs and MSTWs of the world. But this one has underperformed. So this is one that I'm also going to be watching closely going forward, is that not only has it underperformed some of these other funds, but it's also underperforming the S&P, which is something that makes me a little bit concerned. But this is one that has done better when the price of Bitcoin has gone up significantly, right? I mean, if we go back to like January of the, or sorry, if we go back from, let's say, like that low back in April, just out of curiosity, I imagine it's underperformed the or outperformed the S&P since then. So April 2nd was the low for the S&P. Yeah, I mean it's up 38% versus 23 for the S&P. So this is one that needs considerable Bitcoin share price returns to do well. I think the reason that Blocks has done well and that this one has done well is that it's a little bit more crypto adjacent, and not only that, when they say crypto, a lot of times you do get a little bit of Nvidia, do get a little bit of Taiwan Semi, you get some of these other companies that honestly they aren't really crypto companies, but they're crypto adjacent, right? So that's why I think that these ones have done better. I do own this one. I do plan on increasing the position, but the main reason, number one, is for some diversification, and number two, I mean, it's hard to argue against good performance, right? I mean, at the end of the day, it's hard to argue against good performance. But one thing to point out here as well is that, I mean, it hasn't always dominated, right? I mean, if you go back to September 5th, this was kind of the low in Bitcoin, right when it hit about 108 uh, back in September 5th. This was the low. Ever since then, I mean, it's up about 20% in a matter of 2 weeks. So that's very impressive, right? That's very impressive that you've had this resurgence in crypto and in the markets, and it's done that well. I mean, you can be up like it's actually a little over 20% in 2 weeks. Now again, Bitcoin can easily be up 20% in 2 weeks. Strategy can be up 20% in a day. I mean, in a week for sure. So it's not that it can't be done anywhere else, but that is impressive. So, uh, full transparency, I do own this ETF. I do plan on increasing the position. I'm not going to make it any crazy high percentage. Because there's a lot of new funds that look really good, and that's something. The last thing I'll touch on here is going back like 4 or 5 years, there was like none of these. I mean, we have probably, I don't know, 5 to 10 of these funds that they're really good. Like they can provide really good income. Uh, and I mean, it's real like something that a lot of people talk about these days is, retiring early, financial freedom. And up until recently, like it was hard to do that. Like without your, decades of just dumping money in the S&P or getting lucky and hitting some hot stock, like you ain't retiring early. But I mean now, with like let's say you have, a basket of some of these companies, like like if you had like $250,000 and your yield is 30%, 40%, that's what, 60, 70, 80 grand a year? Like it's realistic to retire off, quarter million, $300,000. I'm not saying you should do that. I wouldn't be comfortable unless I was a little bit more well off, but I'm just saying you could do it. Like you could easily get, 5 grand a month from, $250,000 of a basket of these funds. And there's a lot of people that, if they had 5 grand a month, they could retire. I'm not saying you should do it. Obviously, it's a personal decision. Everybody's situation is different. I'm just saying you could do it. And that's very impressive. So uh, that's what I'm going to leave it on here. If you liked the video, please like, subscribe, comment, check out those links below, and stay tuned for more.